Hello there. Welcome back to my channel. In this video, I want to look at the double entry that involves a transfer of inventory or goods between the head office and a branch. So you're going to see that the questions that we are going to be going through, they are questions that involve goods that are being transferred at selling price, and also we have those that are going to be transferred at cost price. So depending on the question, so you need to know the double entry that is involved when they are transferred at selling price. So let's take, for example, there are goods that are having a movement from head office to branch. So let's just say at selling price and it's from head office to branch. So when goods are moving from head office to branch, the branch is the one that is receiving the goods. So they're going to be debited in the branch inventory account. So we are saying double entry involved. We debit branch inventory, and we credit inventory to branch. So this is a movement that we have from head office to branch. But remember, when we are making this double entry, it is a double entry at selling price. So we are at selling price. So the idea is to leave the value that is in the inventory to branch at cost price. So this one should be left at cost price. So by crediting inventory to branch at selling price, it means we have to reduce it so that it remains at cost price. So you're going to see that we are going to go through two double entries in particular when we are having a transfer at selling price. So the other double entry is to reduce the value that is in the inventory to branch to go back to cost price. Remember, uh, we are supposed to say our cost price plus our markup to get our selling price. So basically, for us to reduce this selling price to a cost price, we have to remove the markup. We're just supposed to say selling price minus markup, then you get our cost price. So basically, that's how we are going to do that. So we have got selling price on the credit side of inventory branch. So to remove the markup, we go to the debit side and enter the amount of the markup. So the double entry that is then involved on the second double entry is we are now debiting inventory to branch at markup price. And then we credit branch adjustment account. So the branch adjustment account is created to reduce the amount in the inventory to branch to cost price. So basically, that's what we have. So this is now double entry using the markup value. So basically, this is what we have when we are having a transfer at a selling price. So when we now have returns that are moving from a branch now to head office, and the double entry becomes the opposite, whereby we are saying when they are moving from the branch, we are crediting the branch first at selling price, and then we debit the inventory to branch at selling price, and then we reduce the one that is in the inventory to branch to we reduce it to cost price by doing the opposite. I would have debited the inventory to branch, so you're supposed to credit it with a markup now, and debit the branch adjustment. So that's what we have. So we look at the second scenario whereby we have got a movement from head office to branch, but this time it's at cost price. So you'd see that at cost price, it means it's not at same price, it's cost price, and the value that is in the inventory branch is going to be transferred at cost price. So there's no need for this second double entry. So what you just need to do is to debit the branch inventory. And then you credit inventory to branch. Using the value that we have at cost price. So this is at cost price. So this is the value that is needed to be in the inventory to branch. So there's no need to do the second double entry that we have of markup because there's no markup when you are transferring at cost price. So basically, we are saying when the question tells you at the beginning of the question that the goods are being transferred at cost price, it means there's no need to open the branch adjustment account. So that's what it means. We can only open the branch adjustment account when goods are being transferred at selling price. So this is what we so we've got two different scenarios in terms of an example that we have goods that are being transferred at selling price, and also we have got an example of one that is being transferred at cost price. So you'd see that at the beginning of the question, that's where you can be able to deduce whether the goods are being transferred at selling price or cost price. So this one leads the JZ dealer as a branch in Umtata. Inventory is dispatched to the branch upon selling at cost plus 30%. So basically at cost plus 30%, it means at cost plus the markup. So this one is being transferred at a selling price. So we see now in terms of the double entry that needs to be done. Here we are saying if you come here, that's where we've got inventory supplied by head office to branch. So you'd see that this is a movement from head office to branch of 250,000. So we do the double entry that we. So having the scenario that we have here, whereby our goods are being transferred at a cost price plus 30%, it means they are being transferred at selling price. So in that case, we are now making our double entry using the first double entry that we put there, whereby we are going to have two double entries. So we refer back and see that we look at the first scenario that we are given that we have got inventory supplied from the head office to branch. So this is a movement from head office to branch of 250,000. So we are going to first make the first double entry by debiting branch inventory and crediting inventory to branch with an amount of 250,000. So if you go to your answer section, this is going to be your branch inventory. So you are going to debit it with inventory to branch. And the amount that we have is 250,000. Then the corresponding entry is on the credit side of inventory to branch, whereby we are saying branch inventory. Branch inventory, whereby we have 250,000 again. So here we have 250,000. So basically, this is the double entry. But we also have to calculate the markup. Remember, we've got the second double entry that we have to debit inventory to branch and credit branch adjustment when it's at selling price using the markup value. So in this case, we are told that they are being transferred at cost plus markup, which is the markup being 30%. So we are having 100 representing costs. This is our cost price plus our markup to get your selling price. So our markup in this case is 30% to get a total of 130%. So the figure that we are given is 250. It's our 130%. So we are saying 130 is equal to the figure that we have 250,000. Uh, 250,000. So the figure that we are looking for is at the 30% that of markup. So 30% is the question mark. So simply we make a proportionate calculation whereby saying what we don't have is 30 becomes the numerator, what we have is 130 becomes the denominator, and then we multiply by the given figure, which is 250,000. So we calculate it like that. So we see that the figure that we are going to get is, if you round it off to the nearest one number or the nearest rand, it becomes 57,000. 692. So basically, this is the one that we are going to make the second double entry by debiting inventory to branch and crediting a branch adjustment. So we go to inventory to branch and then we debit there. Remember, it's supposed to go to branch adjustment, which is the markup proportion. It becomes 57,692. And then we go to the credit side where we have of our branch adjustments. And remember, this is inventory to branch. Inventory. Inventory to branch, we have 57,692. So you see that we have completed the two double entries on that movement. And then we see that if you go to the second scenario, if we go to the second scenario, we are told that this is now at cost price. So at cost price, we are going to just make one double entry since they are being transferred at cost price. It is the head office of Lion Stores in Gauteng invoices goods to branches at cost price. So this is at cost, so we are not going to be worried about the second double entry. The head office has a complete set of books for each branch. So in this case, we see that we go to where we have got the transfers. Head office send goods to branch. This is movement from head office to branch here, which is 168,000. So we are only going to do this double entry as indicated at cost price, whereby we debit branch inventory and we credit inventory to branch. And in this case, the amount is 168,000. So we go and make that double entry. This is now at cost, whereby we are saying we debit branch inventory, and it's supposed to go to inventory to branch. And then the amount that we have is 168,000. Then we go to the opposite side, which is inventory to branch. We have our branch inventory. $168,000. So when it's now the second part whereby we are told that goods returned to head office. So you just do the same thing by doing the opposite, whereby when they are being returned to head office, means they are moving from the branch to the head office. So you're going to credit our branch inventory, and then we credit inventory to branch at cost, and then we leave it like that. But in this scenario, you first credit at sale price. If they are being transferred at sale price, they are being retained at sale price. You credit inventory to branch at sale price first, and then you debit inventory. You credit branch inventory at sale price and debit inventory to branch at sale price. Then you make the markup double entry, whereby you are now crediting inventory to branch at markup, and then you debit branch adjustment at markup. So that is exactly how we are going to treat these adjustments. So let's take notes, and please let's stay tuned for more videos to come. Hopefully the video was helpful. Let's not forget to subscribe and share. We'll meet again in the next video.